just get my truck oil changed, so I thought I would take this opportunity to talk about the stock market, the erratic behavior of the stock market. You probably have noticed that your 401k has seen some drop. So if you have, say, $300,000 in your investment in your 401k, you may see an 18% drop, an $18,000 drop. Now this may have caused some panic. This may have caused some fear among a lot of people. But when you have a market downturn, especially in a 401k fund, depending on what phase you're in, whether you're in a wealth accumulation phase or in a wealth preservation phase, I have a video on that if you want to watch it here that talk about the different phases. But if you're in a wealth accumulation phase where you're still accumulating wealth, where you're still contributing, where you're still in your 20s, your 30s, and your 40s, where you have over a decade of letting your money grow, when you're in a wealth accumulation phase, when the market is dropping like that, or when it's erratic like that, but it goes up and down on a weekly basis, that actually is advantageous for you because of the concept what we call dollar cost averaging. When you dollar cost average into the market, what it means essentially is with the same dollar amount, let's say $50 a week, when the share price is higher, you get less compared when the share price is lower. Because basically, whatever dollar amount you contribute on a weekly basis, $50 a week, say for example, if the stock price is $50 per share, you only get one share. But if it is $25 a share, instead of getting one share, you're getting two shares. And if it keeps going up and down, you dollar cost average on a weekly basis. When it goes up and down that way, your cost basis is a lot lower. You're able to get more shares. And if you stay invested for a long time, over a decade or so, now you have all that shares to accumulate wealth for you. Whereas if the stock market continue to go up and never go down, never go up, never go down, as it goes up, it seems like it's a good deal where you see your overall equity goes up. But in reality, you are losing chance of making more money, because if the market keeps going up, the same $50 a share, you continue to get less and less shares. So when you're ready to retire, you have less equity, less shares to grow your wealth. So despite what you see in the media when they try to put all these fear mongers and the amateur investor talking about pulling your money out of 401k, if you're in the wealth accumulation phase, right now is a great time to celebrate because of the ups and downs of the market. Each week, each Friday, where you have your 401k auto deducted from your paycheck and it makes the purchase for you, just know that you are continuing to dollar cost average. You are continuing to acquire more shares at a lower cost. And because of that, you're acquiring more shares for your wealth building 10, 20, 30 years from now. Now, on the other hand, if you have less than 10 years until you need the money, then it is a little bit concerning, right? Because you don't know where the market is going to head to. This is why in my 401k Millionaire series, I talk about what phase are you in, what is your time horizon, and depending on what phase of wealth you're in, whether you're in wealth accumulation or wealth preservation, and depending on the time horizon, how much time you have until you need the money. Currently, it's time to celebrate if you are in a wealth accumulation phase and your time horizon is more than a decade. If you are in the wealth preservation phase and you'll have less than a decade, you need to start watching your asset allocation to make sure you're not too heavy in stock, because stock is volatile. Stock has a lot of potential for growth, but there's a lot of potential for the downside. So if you're in the wealth preservation phase, then you need to make sure your asset allocation is set according to that phase. Until then, be careful what sources you are getting your information from, and don't make a knee-jerk reaction to your 401k that can have a negative impact for your future wealth.